Okay, everybody. Good morning, good afternoon, happy Friday. Thought I would get this out around 11 Baltic time. Of course I didn't. 1 p.m. All right, sticking with the old stock to flow. This one is going to be perhaps a doozy, perhaps very, very numbers intensive, more number intensive than I've ever done. We're not going to wrap up the stock to flow analysis today. It might take one or two more videos, but I want to, as the title says, keep beating that dead horse and explain why the relationships that were created with the stock to flow model are spurious, particularly with regard to gold and silver. As I've said many times, and even Plan B, who is, kudos to him for bringing people into Bitcoin and enjoying the FOMO of his stock to flow model, certainly has taken fire over the years. But as most people know, the price is not keeping up with it at the moment. I will analyze that, not in this video, but shortly. He himself, of course, has said, some models are useful. All models are wrong. There's a few famous quotes that way. I understand that. I certainly understand that. But I think that there is just a more accurate, calm way to go about it rather than continue with this idea of stock to flow. Because, again, like I've said, even though we directionally agree, that is everybody, whether you have been promoting the power curve for 6-7 years, as I have, or you're promoting just general Bitcoin adoption, or you like talking about stock to flow because you think it's simple for friends, investors to understand. I think there's one good way to go about that, and it's always going to be price, okay, to me. I remember we interviewed Eric Voorhees a while ago now, maybe 5 years ago now, on the show, and he said, probably 6 years ago actually, and he said that, you can talk to Bitcoiners, or excuse me, non-Bitcoiners, no coiners, as logically and rationally and soundly as possible, explain to them the benefits of sound money, the benefits of why Bitcoin has utility. But at the end of the day, the only thing that really gets someone excited about Bitcoin is the price. And that was a sound observation. That was probably even 8 years ago, going on 8 years, actually. Now that I think of it, it was the summer of 2017 when we chatted with him about that. There were a few hiccups still going on in Bitcoin's protocol development, a few bugs, a few competing protocol implementations, SegWit 2x, Bcash, so on and so forth. So that was quote unquote only 7.5 years ago, 8 years ago. So it's pretty interesting just to even compare that amount of time and how much Bitcoin has grown. But regardless, if you've been following the protocol in detail or not, the only thing that seems to matter, and for the masses at the end of the day, is price. That's the only thing that seems to matter at the end of the day. So I want to harp on that issue during this show, but show you guys a lot of data. All right, a lot of data. So I'm gonna stick to a somewhat some kind of an agenda here. Really, it's just ideas here. Okay, so then we're talking about stock to flow and some fallacies with stock to flow. Okay, just general ideas I wrote down. Doesn't come from a textbook. All right, the highest market signal is price. Okay, a lot of great economists talk about that. Should be clear. It's the highest market signal. Supply or stock the stock of something, influences demand as an important but secondary factor. All right. Market cap, or stocks in USD terms. When we think of global valuation, we usually measure things in dollars. Of course, you could measure them in barrels of oil or gold ounces, but most people don't think of that anymore. So we do market caps in dollar terms. All right. That influences demand as an important but also secondary factor. Number 4, when we do economic calculation, we are measuring probabilities. And in markets, this means a trend. All right. Are consumers buying or selling your good? Of course, there are many reasons. Are you cost effective? Are you doing something different? Are you differentiating yourself, the utility of the goods or the service that you're offering? All those things, you can go to business school for all that. But at the end of the day, if you want to succeed and there is a trend of something, you have to stay on the trend. Okay, so the trend must follow the highest market signal. All right, and then C number 1, which is price. And there are 4 basic trends: linear, logarithmic, exponential, and power. Linear, logarithmic, exponential, and power. Bitcoin's price, and many times people talk about adoption. You can totally interchange adoption. It follows power. Bitcoin's supply, or stock, this is what I'm going to talk about today. I haven't mentioned this too much, follows logarithmic. All right. Gold, silver, most of finance, at all markets, stocks, they follow exponential. But to keep it simple, all right, we don't want to shoehorn or ham fist an idea into our models. Okay, so linear, logarithmic, exponential, and power. Bitcoin's price follows power. Supply follows logarithmic. Everything else follows exponential in markets. That's what we are observing. All right, so let's talk about it. I made many charts here, talked about this a while back. Not a while back, but over the past few episodes. Gold price here, it's exponential. It means a straight line on log scale. Okay? And the most important thing is compound growth. All right, so the black lines are matching up here. And the compound growth is the percentage, the black straight line, 5.1%, right axis. It means gold's price has increased on a trend line of 5.1% per year. It's exponential growth. Silver, same thing. Exponential growth, log scale, it's a straight line. Even though it's not as great of a R squared, 52%. Silver's price increases at 3.5% per year. Okay, 1.5% slower than gold. Now Bitcoin, different chart, but I've shown this chart many times. The actual compound growths and then the rolling lifetime compound growth. What does Bitcoin do? When I pulled this model up, which I wasn't even looking, but I pulled it up today, we're at $104,000 per Bitcoin. Okay, January 31st. Bitcoin's price is power. So this is log scale. Clearly, this is a fantastic R squared, 96%. I've shown the same charts with exponential curves attached to it, or exponential trend lines. They don't fit as well, not nearly as well, in the 80-something percentile. Logarithmic doesn't fit. Linear certainly doesn't fit. So Bitcoin's trend line is power. You get this sort of slowly, nice gradual curve here. And it's really not that slow if you measure it over time. Okay, what's the curve now? A little bit under actual price, 90 grand. What was the curve a year ago? What was the curve a year ago? 60 grand. Okay. So obviously it was growing faster here, slower here. Let's do now a compound growth lifetime. It's the same thing as this black solid line on exponential. All right. But on exponential, it's a straight line. It's constant. Exponential growth is constant. With Bitcoin, it's a slowly decreasing compound growth. All right. So if you were buying back here on trend, all right, not on the actual day, wherever it was going to be way over trend, way under trend. But if you're buying right on that trend line back in 2010, 160% compounded per year if you held till today. All right. And that's slowly come down until right now. What is the growth of that trend line? 43%. 43.3%. All right. And coming down. But this rate of decrease is actually not that incredible. I've talked about this many times. To get to S&P-like returns with reinvesting dividends, on average, 9% over the last 55 years. Over the last 10 years, it's higher because of all the money printing from 2009. You might be 12, 13% compounded. To get to 10% compounded on this curve, you got to go out to the year 2170. Okay, so well outside of Bitcoin reaching 21 million coins. All right, I'm not saying that it's going to follow that or will even be on some fiat dollar standard still at that time. I'm just saying that's what the model projects out. So the decline of this growth rate is not that fast. It might seem fast here, but is actually not over the long term. All right, so now this is price. Now let's look at supply. We talked about gold, 1.7% per year compounded straight up. Talked about this. Talked about silver, 1.4% per year compounded straight up, straight line on log scale. Now Bitcoin. Finally Bitcoin. We've laid the groundwork for Bitcoin. This is log scale. This is actual numbers. 2009, nothing. Now rounds to 20 million, it's 19.8 million coins. I'm not even doing one decimal here. 20 million Bitcoins, it's only going to be 21. All right, what is the best fitting curve for Bitcoin? What did I say here? Bitcoin supply stock follows logarithmic. Okay, interesting. Let's draw a logarithmic trend line, see what it looks like. Okay. Logarithmic in layman's terms, and I don't see it often in finance, okay? But it's super fast growth at the beginning, and then it just slows down drastically over time. Okay, so it's different than power. Power is not as fast at the beginning. It's super fast. And also, a key point with logarithmic is it is anchored to 1, x equals 1. Okay, so when x equals 1, the y value will be 0. Did I say that right? I think the y value will be 0 on a logarithmic plot, and then it will go, or no, your coefficient, which isn't a y-intercept, right, will be, you'll find a number for whatever it is at x equals 1, and then typically, not always, but depending on the data, you could even go negative here, which doesn't make sense either on log scale. So I had to stop this actually. Just, the curve goes negative, doesn't make sense. Whatever. I'm into applied statistics here, so we're not trying to worry too much about the coefficients. But I calculated this out manually in Google Sheets, got you this trend line. But this is more just, I'm going to stop here. I'm not taking this much farther, okay? And why? Because I can give you compound growth rates from today, which are not going to show up here. Here we go. The lifetime number. Okay, so look, if I wanted to shoehorn in exponential, we can do it. Okay, so what's the lifetime compound growth rate for silver? 1.4%. For gold, and this is in terms of native, right? Native ounces mined, 1.7% for gold. Bitcoin, the slope of this curve from the beginning until today, 23.4% per year. Pretty quick, okay? If you do a stock to flow of that, 4, okay, which is low. Remember, a higher stock to flow is better. But of course, if I back this up now and we'll take it out to 2140, we know what will happen. Okay, and this is, by the way, the logarithmic trend. It's wrong. I'm just showing it for illustration. Even though it's a pretty good fit, 93% R squared. Okay, it shows generally this is what Bitcoin does. It grows very fast at the beginning, then tapers off dramatically. It's wrong itself. Let's draw the curve out to 2140. We're already at 28 million Bitcoins. Sorry, I should have the M there. I don't have it, right? You know this is million, right? 31, 32. If we go out to 2140, the trend line of a logarithmic trend for Bitcoin is 32 million. Okay, so it doesn't really make sense to use it, but I'm just using it as an illustration to show that the general trajectory of actual native Bitcoins is not exponential. It's not power. It's not linear. It's logarithmic. Okay, so it's just a point of fact. It's a point of fact, okay? And if you drew a trend line over the lifetime amount of data, you would get something that would fit better. It wouldn't go to 33 million Bitcoin, but the R squared would be worse. I could show you all different trends. It's not really worth it. The point is, Bitcoin's native supply growth, logarithmic. It's a logarithmic trend. All right? I'm going to leave that there for now. We don't really need it because we know, per the protocol, how many Bitcoins are coming out every year per the protocol. That's why the stock to flow model, is more intuitive that way. Totally would agree with that. We don't need to do a trend here. It makes sense to do trends with gold and silver because there's no protocol, right? That's just the market. But those trends are super strong. They're super strong exponential. How strong? Look at that R squared. 100%. 100%. Talked about that past couple days. Gold and silver, both 100% R squared as far as ounces of gold or silver coming out of the ground. Geo, very nice. Love that. I'm going to have to read more. I love that they're going to study the Bitcoin as a reserve asset. And I did see the Lagarde news as well, that she's confident Bitcoin will not be a part of the assets. That's she's had her foot in her mouth a lot talking about Bitcoin, and it's a shame she keeps doing it. ECB is not on a great path there, for sure. They've never been on a great path when it comes to Bitcoin. No, not a surprise, right? When you're a central bank. Thank you for that news update. Thank you, BTC for Plebes, for sharing on Noster, on Noster. I need to do this more, I know. I'm so terrible with my marketing, so if you guys can help, always appreciate it. Appreciate the good words. We're doing stock to flow, though, today. We're doing stock to flow with a fine-tooth comb. All right, we've done gold, we've done silver. What is the point? We're going to now look at all of these in terms of how they would fit on this cross-asset model. Okay, this is what Plan B did. So let's go back. Here's his first one in 2019. All right, he had this cross-asset model, which he changed, by the way. I haven't been able to find old pictures. I do remember seeing him using silver at a lower value, even 3 before, which again, I'm sure came from Saifedean, because Saifedean is big into promoting gold over silver. Again, I don't care one way or the other, but it's cherry picking that's another point of the show today, is talking about cherry picking stocks and flows for your trend line. So we got 62 and 22 is what he used for silver. Keep that in mind. Here's his updated model from 2020. All right, from 2020, his cross-asset, picking and choosing again. He's not labeling them in the legend, unfortunately, but it's similar. He's got gold and silver here, okay? And I've showed this a couple times. Remember, this was from back at the 2019 post. He listed platinum, palladium, silver at 3, gold at 54. Okay, so this affected his cross-asset model. This was a different service that picked this up, but they credited him. I remember it. He deleted all his pictures from that. But again, the question is which stock to flow to use. That's what I'm trying to talk about here. So this Monday morning newsletter, they picked it up. So what I want to do is we have gold, we have silver, we have Bitcoin. We know the amount of Bitcoins that are coming out of the ground. Coming out of computers, out of thin air, literally out of hash rate every 10 minutes. So we want to do our own stock to flow analysis here, and I want to be rigorous. I want to be very rigorous. So I'm going to show you. This is a lot of numbers. It's a lot of numbers. If you guys stick with me through this, you're champions. But I got everything on a spreadsheet here, which I basically recorded from all of these different efforts. Okay, not even price. All you can do stock to flow on price, but like we got all time ounces mined, cumulative supply mined, Bitcoin, so on and so forth. Here's how you got to break it down. Stay with me here. All right, I got a stock to flow metric, period start, period end. I got a stock, I got a flow, I got a market cap, because remember, the point of what he's doing with his cross asset, he's taking market values, and then he's looking at their stock to flow and plotting them to get his stock to flow model. I got CAGRs, doubling times, and stock to flow. First point, I've said this many times in the last couple of videos, CAGR and doubling time is, in my opinion, the best. You find CAGR for any metric, doubling time, that's how you sort through stuff. Okay, so like I said, gold price, the CAGR, lifetime 5.1%. Great. It's doing well more than that recently in the last couple of years. If you bought, in 2015, you'd be running a 9.5% CAGR. It's all variable, but if you want to smooth it, you want to run exponential of the trend line, you got 5.1% for gold. Okay. I'm not showing that though, because gold, notice, all right, we could do one for gold, but gold is just a price. He has, like the core of his model is to derive value from scarcity. It's to derive value in the y-axis from scarcity, which is measured by stock to flow. Higher stock to flow, simply 1 divided by the growth rate. So you have to have 2% growth rate, 1 divided by, it's going to be doubling every 50 years. 1% growth rate, doubling every 100 years. But again, I just have to, it's beating a dead horse here. Why is stock to flow worse? All right, because it's not mathematical. It's like an ape. It's an ape number. It's just kind of picking something out and running with it. The number that matters is the CAGR, because, as I said in my little lecture here at the beginning, markets move in exponential form. That is constant growth, markets. And that includes gold and silver. So just for example, all time, we talked about this figure a lot, gold, the CAGR 1.7%. From that, taking log of base 2 divided by this CAGR, you get doubling time, 41 years. Okay, so that is actually how fast the stock of gold out of the ground doubles every 41 years. But if you do sort of the ham-fisted way, the stock to flow, you just take 1 divided by this rate. That gives you 59. This is that all-important number of gold around a 60s stock to flow. That's worthless. It doesn't tell us anything. It doesn't tell us the stock of gold does not double every 60 years. It doubles every 41 years because it's running at a 1.7% growth rate. I'm going to keep, I know I might sound a little bit exasperated with some of this because I have actually been thinking about this more when I've been making this table, which is, been painful, to be honest, but nonetheless. So not all of these metrics I can get a CAGR for, but all of them I can get a stock to flow because it's sort of basic stuff. So what are some of the other things? Well, for example, here, I don't have a CAGR. Okay, this is a average from 1971 for gold. All right, so if you average all the gold ounces from 1971, you would have 4.5 billion ounces worth of gold. Okay, remember, the actual stock is 6. I should have put the ones in today. I didn't need it, but we'll go back here for the actual all-time for gold. 6.9 rounds to 7. Okay. All right, but the average over 55 years, 4.5 billion ounces. The average flow of new gold coming in, 76 million ounces. So there's one way to do stock to flow right there. What do you get? 59. Okay, so it's close. It's close to what I did, but it's not the only way. What about looking at it from 2009? That's how long Bitcoin has been in action. So let's see what the stock to flow to gold is there. Similar, but different. Okay, from 2009, it's this one. All right, let's color this off. Got 6.1 billion ounces average. Average flow, 100 million. Stock to flow, 57. Similar, but different. Okay. Also, what market cap should we use, right? Remember, he uses a market cap here. He's got just two very simple, nice little dots, which happen to fit his curve for gold and silver. All right. He's got 62 for gold, 22 for silver. All right. Happens to be about around 10 trillion for gold, 200 billion for silver. It's more like, it's probably more like 300 billion if I can look at these lines on the exponential. Okay. In fact, he says it right here. Note that the peak of the bull market in December 2017, Bitcoin S2F was 22 and Bitcoin market value was 230 billion, very close to silver. Okay. And again, that's going to be a wrong number in my opinion. Depends on what he's using, but do I have the caps for silver? Yes, I do. Let's go to, this is available. This is the best for Bitcoin that you could do. So 2017 was his number? Yeah, 2017, I got as available silver in 2017. See it? It's the first lot. It's the first number. I got around 500 billion. Remember, Bitcoin did not pass the value of silver until Elon Musk started buying it with Tesla in February of 2021. Bitcoin passed Tesla's valuation right about here. Silver actually spiked as well during this period, just during COVID, during peak lockdown meme stock trading of COVID. February 2021, silver was 800 billion. Bitcoin got to 800 billion at that time. It passed silver at that time. But in 2017, silver was actually 500 billion. All right. Again, my numbers, I'm going to rely on more than his or whatever article he was picking up on, some different articles, right? This is just an incorrect. First of all, you got to get the numbers right. This is an incorrect number. 230 billion in December 2017 was not close to the value of silver. It was not. It was half the value of silver. So again, got to be rigorous here. If you want to do something like stock to flow and create a model, you better be rigorous for your stock to flow valuations. Okay, nonetheless, I digress. I can't go through this whole table. It'd be insane. I'll promise I'll get you a better picture so you guys can make sense of this. But it's just to show you. Okay, so let's go to silver then. Let's beat silver down just to sort of beat that dead horse, right? Let's look at silver available market cap from let's do average. Many ways to average, many ways to do this. From 2009. Okay. Here's another thing. You can do stocks and flows in native terms. You can do them in dollar terms. For this table, look at this column right here, type. I've done it in native, gone native, and I've already gone dollars. So we can do it in native terms or dollars. Gold and native, gold and dollars, gold and native, gold and dollars, gold and native, dollars, and many different ways to do it from there. All right, I'll explain. Silver and native, silver dollars, silver native, silver dollars. Okay, so here's silver in dollars. You do a stock to flow, average market cap from 2008, $600 billion. Average flow, that means the average change of the market cap during that period per year, 38 billion. All right, this is all annual basis, right? Stock to flow, 16x. And you say, no, we got to do native ounces. Okay, well, let's do native ounces for silver average from 2009. All right, this is available ounces. All right, average from 2009. It's gonna be quite a different picture than what you saw from Plan B. This is silver available. This remember, silver available. This discounts industrial stock. What's your value? 28 billion, right there, right? It's about right. 30 billion is the number. But I'm averaging from 2008 to 2024 during the life of Bitcoin to get $28 billion of silver. Sorry, 28 billion ounces of silver. How much flow came out a year during this period? Average 335 million. Give me a stock to flow, 84. What does Plan B say? He's using this sentence. Note that at the peak bull run in market, December 2017, Bitcoin SF was 22 and Bitcoin market value was 230 billion, very close to silver. All right, he's talking about this right here. But what silver valuation was he talking about? Because the best for silver, in my opinion, is just looking at how things changed for silver over that period. Okay? And then you can say, no, that's not correct. That's not correct. We need to discount. We need to discount the value of your stock to flow because there's actually more silver coming into the market. It's just some of that silver is going into industrial. And I'm saying, well, no, actually it doesn't matter. You can still measure the stock of available silver, that is jewelry, silverware, and bullion. Measure the rate of change. All right, you can do a compound growth measurement, which is what I do here. It's this CAGR. See, CAGR from 2009. Very scientific. I measured the trend. When you see CAGR here, by the way, it means a trend. So when I say CAGR from 2009, it means measuring the trend for available silver. That was an 80x. It was an 80x stock to flow. All right, from 2009 to 2024. All right, simple average would give me 84. So how did Plan B get to around 20 for his silver? Well, something close would be, let's just look for if you get to 20. I see 20 using market cap from 1971. All right, again, so that's saying on average, the market cap of available silver was 293 billion. On average, dollars. On average, the flow was 16 billion a year. What's that stock to flow? 18x. That gets somewhat close. But then you say, well, that's not a good one to use because that's dollars. We need to use native. Okay, so let's look around. I don't see it really here. We can go down here. Bullion. Well, remember, why did he use 3 in his deleted picture here originally from his original post? Why did he use silver as 3? I know why. Because Saifuddin told him to use that number. But the answer of, I can find it. It's right here. Silver bullion. We'll do both. Again, you can do many different time periods, guys. You can measure this in different ways. Here's the 4 or 5. I calculate 4 or 5. It's close enough. I'm going to give the benefit of the doubt to 3. 3 is too aggressive. That's too unhelpful, unfriendly to silver. From 1971 till now, the average bullion, that's just coins and bars, only 3 billion ounces. Remember, silver mined all time, 60 billion. I should have actually had that on this chart, but I don't. This is available. It's all-time average, sorry. Let's just show you, just so you can see it. Many different numbers here. All the stock to flows are recorded, don't worry. All-time averages right now, what do we got? 61 billion ounces have been mined throughout humanity, okay? But remember, in silver, about half of that is every year churned through, recycled through electrical conduits, cars, RFID, chips, keyboards, iPads, whatever. I mean, a ton of stuff. Industrial usage, okay? So we don't count that as store value. So what he's saying is is deduct industrial stock, but he's also saying deduct jewelry stock. Take the jewelry out. Okay, so that's how you get down to only 3 billion ounces of a stock. That's how you get to it, is we deduct industrial, we deduct jewelry. From that huge number of 61 billion ounces, you only get 3. But then don't discount the flow. Take the full flow during that period. And again, I'm just using averages because how else can you do stock to flow over a long time period? Just using averages. This is where you can get to a number, which is somewhat similar to his 3, 5, or 4. So that was his original number that he put out there, was silver was the stock to flow of 3. Then he backed it off because he thought he'd try to line it up to this cross asset model. He put it up to about 22. Let's try to find a 22 for silver. We can see it, if we want to go to the Boolean idea, we can see it closest would be here, okay? Okay, but again, this is just one idea, just one time period. Who knows? You can do this infinite amount of times. Taking the CAGR from 2009, that means the trend line of just bullion in 2009. I should have put the full stock, but again, because it's not a stock to flow metric here. It's calculating the CAGR, so it's like just running the trend line because again, it's exponential. The CAGR is 3.9%. The simple stock to flow metric, 1 divided by, you get 26. It's kind of close to his. Another way you could do available. Again, my personal preference, if you want to talk about that, is as far as available silver. All right, available silver would be looking at this number. Okay, so this is silver available ounces compounded from 2009. The trend line, the slope of the trend line is 1.2%. Okay. Still, that's a very different stock to flow. Just 1 divided by is way different. It doubles every 56 years, available silver. That's what's actually happening. It doesn't matter what you say stock to flow is. That's like an ape number that you just pull out. The actual compound growth on an exponential curve is 1.2%, doubling every 56 years. But of course, we can find different metrics, different time periods. So if I want to try to find something that's close to his 20 that he used for his model, we could use this one. But again, this is on the MCAP. So I would say maybe we shouldn't use market cap, right? Because that's in dollar terms. It's not native silver. But nonetheless, we can find something that gets close to his 24. What's the point? I'm trying to show you through reducto ad absurdum that, we can find any numbers here for our stock to flow. Okay, so we got gold, we got silver, you got different time periods, you got different buckets of gold, all-time gold, non-industrial gold. Remember, available is just non-industrial. You got bullion, which is just gold in coins and bars, and you do the same for silver. And then we got Bitcoin. I use the word cumulative here. It's the same thing as all time, but it kind of just makes more sense to use cumulative. We're using it every year. We're going to get to Bitcoin in a second, but hopefully, let me know if you have questions on this. What I'm trying to do with this table is just beat a dead horse of you can very easily make the case that, any one of these stock to flows would work. And here again, we need to be very consistent if we are going to compare gold and silver. Okay? So here, let's go back again. Both of his models for gold, we can see that it's around 60. Okay? For sure, it's 60 here, 62. All right? And here as well, if we look at the log curve, it seems to be the same. All right, so it's 20, 30, 40, 50, 60. Yeah. Maybe he put it even a little bit higher. I don't know. He didn't label it here this time, which was interesting. But, oh no, he used this one. 58.3. Okay. Again. And he's using native tons. Looks like full flow. But my point is, why use that only? Because here's the point. 59 or 60 for gold. That is an all-time figure. That's an all-time stock to flow for gold. So if you look at the all-time silver stock to flow, you're at something like 60 to 70. all time. We can use CAGRs, we can use trend lines, we can use averages, we can do different time periods, right? I got 1971, 2009, 1971, 2009, different ways. 60 to 70 stock to flow. Okay. If you want to compare, this one's close, right? This is an MCAP number, 21x. But again, it's wild, it's variant. If you want to do available ounces, okay, which would be here, it's even better than gold. It's better than gold because this is the actual stock to flow of available ounces on average over the last 50 years or the last 15 years, depending on which one you want to pick, based on a trend line, based on averages. If you want to discount that, take the full flow of silver, all right, the full flow, which is 584 on average since 1971, 825 million ounces of silver on average since 2009. You want to discount the stock, take the full flow, you're still better than 22. This is also the point I wanted to make. Right there. Available silver, discounted, you're still better than what he put here of a number 22. So the point is, I don't even buy the premise. There are so many different ways to calculate stocks and flows. I meant to pull up a tweet that I did in 2019. I think it was on this, or when I did my monetary base exhibits, because I've always said, you know, whether you're a gold bug, whether you're a silver bug, they're so biased one way or another. It's really funny. You can pick an infinite amount of stocks, an infinite amount of flows for your model. I don't see one or another that is like super intuitive. And if you pick one, right, like he picked 60 for gold and silver, I can't find on the corresponding side one that is definitely going to fit 22 for silver. Certainly not 3. Certainly not 3. If you're going to pick 3, a stock to flow of 3 for silver, the corresponding gold, okay, so this is like penalizing silver as much as you can, to be clear. All right, a bullion of 3 or 4, it's this one. Okay, this is the most like hateful. If you hate the silver markets, you quote this. Safety did this a lot. Okay, if you hate silver, give it a stock to flow of 3. It's actually 3 is too harsh. 4 or 5 is the real number. Give it a stock to flow of 4 or 5 if you hate silver. But if you do that, you can't immediately go back and start talking about gold being a stock to flow of 60. Those are different buckets, not apples to apples. The number would be penalizing gold bullion only. It's here. It's 20, 21, 25. Again, depending on how you measure it. From 1971, it's 26. From 2009, 21. So if you hear anybody talk about, like on any newsletter, on any podcast, again, I don't care about the silver market. I'm long Bitcoin. This is the funny thing. We're all directionally aligned, right? But if you hear a gold bug say they hate silver because the stock to flow of silver is 4, which is the correct number, it's not 3, they better in the next sentence say that the stock to flow of gold in that case is 20. Because that's only looking at the bullion stock of gold, which is much less. It's only, 17% of the total, right? Is that right? Sorry, 28% of the total. It's only 28% of the total. 2.3 billion ounces. 2.3 billion ounces. And you take the full flow during that time period, which in the last 15 years is 100 million ounces per year. Since 1971, 76 million ounces per year. Doesn't matter, just get your time periods right for your multiples. If you want to penalize silver and get it a stock to flow of 3, you better in the very next sentence say that gold is 20. So, I'm beating that dead horse. I'm sorry, I had to do it. I can't go through all the rest. I know it's too much. So let's now put it into an easier to read scatter plot, and let's talk about that. Okay? Here we go. Here we go. Not great colors, not intuitive colors, but golds are, I have, again, native values, dollar values, gold, silver, Bitcoin. Golds are blues, silvers are greens, Bitcoins are reds. I didn't really waste too much time here. This is basically that table that I made for you, but it's in scatter plot form. So one criticism of this method that I just used is, well, you can't equate dollar and native. So let's just start with dollar. I agree with that, by the way. I'm just showing you to be completely absurd. This is just dollar changes. Okay, so if you took the dollar values of market caps, okay, so look at what this is saying. This particular bubble, you can't, they are overlapping a lot, as we see here, right? The stock to flow is 18. Stock to flow is 18 here. The market cap is 15 trillion. Okay, and that is the current market cap based on a CAGR from 2009. It means it's based on the trend line analysis from 2009. Okay, of just available gold. Okay, so it's not total gold, but available gold. You just take 1 divided by the CAGR, 1 divided by the compound growth rate, you get a stock to flow of 18. Okay. If we go to all-time gold based on the market cap. Remember, this is not native ounces, okay? Not native ounces. This is just in dollar terms. You get a market cap of 18 trillion. Again, you run the slope of that curve from 2009, you'll get a compound growth rate, 1 divided by it, stock to flow of 18 again. So notice that the gold in dollar terms is around 18. Silver is more all over the place. Fine. You would expect it to be different because it's a smaller market, more industrial market. I'm absolutely don't disagree with those points that it is. But you can go anywhere from, say, 15 on your stock to flow. Let's just ignore these outliers. Up to even 55, 47. You have a better stock to flow. And note why this doesn't make much sense, or at least is arguable that you could remove it, is because we're looking at dollars and you want the dollar value to grow higher or faster. And if it grows faster, then it's going to have a higher growth rate, or i.e. a lower stock to flow. So I understand why you wouldn't want dollars here. So it's fine. I'm just showing you can do stock to flows in any different way. Doesn't really matter to me. So that's the point, right? And just one for Bitcoin. What am I doing for Bitcoin? Just the average. Okay, so if you actually average the Bitcoin market cap over its lifetime from 2009, it's only 236 billion. 236 billion. The B's should be showing up there. I don't know why they're not. Stock to flow of 2x, but that's really not a helpful number, right? Let's take off the US dollars and let's just put on, for example, gold now. Gold native. Here's where we get something that gets more around the quoted number of 60. Okay, we can see that the bubbles focus on it there, but it's not the only one, right? If we look at gold bullion, the growth of gold bullion, the trend line from 1971, it's actually quite slow in native ounces. So that'll give you a very high stock to flow. So we could quote gold bullion at 155x. This is the trend line. This is the average. Trend line, average, 107x. Okay, and these different bubbles reflect the market cap either during the average of my analysis or current. I have a market cap always, right? So sometimes I'm not showing the native number. But here, so for example, I'm trying to find mostly we're around, 18 trillion is the all-time. Gold all-time. CAGR from 2009, that's the trend line of the all-time. This is exactly this chart, by the way. Here. All-time ounces mined, but only looking at it from 2009, not looking at it from 1971. So the CAGR from 1971 is 1.7%. Stock to flow would be 59. I gotta find. Oh, sorry. I'm bad with my switches here. You probably didn't see which chart I was switching to. The gold all time. Too many health issues this week. Let's go back. Let's switch back. Gold all time is here. Okay. So you see that CAGR is 1.7% since 1971. Stock to flow, 59. All right, but if you measure it from 2009, it's going to be different. I'm not doing it on this chart, but it'll be different. Okay, so let's go back to our scatter plot. Point is, with gold, we can see that maybe it's around 60. Not always though. I mean, like look, some of these smaller bubbles are 40. If we're looking at gold bullion, growth of gold bullion, averages versus CAGR. Remember, CAGR is just a trend line, so averages versus the trend line. You got 39x here, 50x, 21x. But for sure, the bigger values grab our attention, right? $15 trillion market, right? Market cap here of available gold. CAGR from 2009, 57x. Great. Something close to Plan B's. But here's another rub. Let's go back to Plan B's cross-asset model. Okay, so I'm going to take you back to this chart right here. What is the value of gold at this point when he's doing this model, which was in early 2019? 10 trillion. And he's trying to line it up to create a trend line, all right, which is a power curve, by the way. It's power because it's a straight line on log. This is a log graph. He's graphing a curve which takes in all these little smaller dots are just the Bitcoin monthly stock to flow values, and then the market cap of Bitcoin at that time. Okay, so it goes up this curve. And indeed, of course, when stock to flow increases for Bitcoin, as it does, value also increases. But he's lining up gold and adding that to his R squared in his model. He's putting gold right there at 10 trillion. Do you notice anything? What if gold was 20 trillion? It would be up here. What if it's 30 trillion? It would be up here. And presumably, with at least this metric of 60, it's pretty much been the same for the last 50 years. So as the gold valuation goes up, you become off center. You get off of this black line. Same would be for silver. Silver's also going up in value. He has silver at a very low, like I said, 200 billion, 200 or so billion, 300 billion. It was really more like 500 billion. Even higher if you include industrial silver. But again, which one do you include? Who knows? It will go up over time. Silver and gold will go up, presumably at the same stock to flow because it's exponential. So since it's exponential, you get the same growth rate. Since it's exponential, the same growth rate means the same stock to flow. So let's go back to my chart. Now. We're still on with gold. Here, I'm gonna start lining this up with Bitcoin. It's going to become clearer. We can see it's moving higher. It's moving higher than 10 trillion, these bigger bubbles, okay? Let's now put native silver on, okay? We got silver values that are over 1 trillion, all right? These are all-time values, you see, in the tooltip there, all-time. But, even here's an available ounce on a stock-to-flow basis with 80. Way different than Plan B's 22, okay? The only thing close is like this number. And that's measuring the trend line of silver bullion is from 2009. It's a very specific thing. I calculate nothing for silver that is close to 20. I'll go back again to his cross asset. I calculate nothing close to 20 stock to flow for silver. If you look at that, let's go back to mine. A stock to flow of 20 for silver doesn't exist. It does exist, actually, I think, if you go in USD. But again, we shouldn't use USD, right? This is wrong. Remember, if we used it, remember, it's native versus USD. There's a lot of numbers on here, guys. A lot of numbers. This is in USD. The growth of the gold market cap in USD. Just think about the growth of gold. All right, used to be like a couple hundred billion 50 years ago. Now it's 15 trillion, 18 trillion if you include all-time gold. That's what this is in dollar terms. You can measure that growth. You can get a stock to flow. So here we could get in dollar terms something like what silver does. Okay, something like what silver does. But in native terms, native silver ounces, which is arguably the better one, I don't see anything for silver that's close to 20. And gold is rising well over than 10 trillion. So again, to line up nicely like he has here or like he has here, I don't see it happening. In fact, now it's 33. Yeah, this is it. So, I mean, look, the numbers change all the time in his analysis. That's the bottom line. This is actually closer to what I have. But notice, this is his revised model. Okay, I think he called it, S2FX model. This is his revised model, which is faster. I'll get to it. I'll get to the formula. It's faster than his original model, which grows slower. And here he uses 22. Okay. But again, if you just pick one value and then try to, fit an R squared to that, of course you're gonna get an R squared that looks good. But now we need to get to Bitcoin. Okay, so let's look at my chart and let's get to Bitcoin. I'm going to put native Bitcoin onto this chart. This is only, live data. I'm not extrapolating. I'm not looking into the future for Bitcoin. I'm just looking at live data. Okay, so Plan B started his model, by the way. Well, that's my grand finale, I guess, point. But anyway, let's look at 2020. All right, Bitcoin's running at a 539 market cap in 2020. All right, 40x stock to flow. 2023, $827 billion market cap, 57x. 2021, $877 billion market cap. Remember, that was the peak year. 56x stock to flow. 2022, $318 billion market cap, 57x stock to flow. Cumulative Bitcoin actual from 2024. It's an all-time figure again, $1.8 trillion market cap, 90x stock to flow. All right, so the Bitcoin, obviously, it's obviously true. Directionally, we know. Stock to flow goes up, value goes up. But is it going to go up in some nice power straight line on log scale that also intersects with gold and also intersects with silver? I don't see it. I don't see that. I will draw trend lines in a second. Now, look, take away the red points. Let's take away silver. Let's try to drill this in. Imagine now, I could have put a chart to be really fancy, but remember Plan B's model came from, I guess this one was 2019 and 2020. Okay. So you could leave this point here. You could leave this point, but take away these big ones, 2022, 23, 21, 24. Take away. Just imagine like you remove them from your analysis. And now you have these points only and this point. And then you have gold. gold needs to be lower to sort of be able to shoehorn a straight line in. You can see that, right? Like we don't even need to draw it. You can have like some sort of a line here. Remember, even keep the dots. I don't even care. Whatever, in your head as you're doing this. Like we draw a line through the Bitcoin points. We're going here. We're missing gold because gold is increasing. All of these big bubbles are coming, as gold has increased in value over the years. And many different ways to measure it. Average, like I said, you can do average, trend line, CAGR. You can measure averages from 1971, averages from 2009. It's going to keep increasing. But generally, to use that 60x number, the 60x will stay the same. So explain to me how the logic of the model, if it's supposed to be cross-asset, just with gold and just with Bitcoin. If Bitcoin is on this trend with stock to flow, and I will talk about this later, if it's on this trend of stock to flow somewhere here, and gold always stays at around 60x, but gold also increases in value, then gold is going to go up here. So it's going to go up here. Trend line is going to go this way. Add in silver. Whoops, wrong one. Silver native. I think the picture is even more complicated. This really disappoints gold bugs, but it's just the way that the numbers are. Silver stock to flow is better than gold, and yet the value is worse. I'm sorry to say, but that is how it works. You have to really cherry pick values, but then when you cherry pick values, you better make sure that, like I said, you better make sure that you do this pari passu, exact apples to apples comparison with gold. For example, this is silver bullion. We can find it average growth from 2009, 28x stock to flow. Then you better be talking about a gold, which I don't even have it. Where is it? Gold bullion, which is here, which is 26. So if you want to talk about silver at 28x, and again, Plan B's was down to like 20 in the first one. In the second one, it was closer, actually, in the 2020 model. But again, his just changed, and they're kind of based on, one article or something. If you want to talk about 30x silver bullion, stock to flow, you better go to find gold bullion. And it's going to be about 26x, actually. And actually, you can penalize it more. Sorry, you can do silver bullion from 1971? Yeah, this is apples to apples. Average from 1971. If you want to get to that 5x, really bad for silver, 5x, that's only $35 billion worth of average value from 1971 for silver bullion. You better only be talking about this gold bucket, which on average has been 1.5 trillion from 1971, 26x stock to flow. Beating that dead horse, guys. Beating that dead horse. This is the only way I know how to explain what's happening with this model is it's cherry picking. Go back to this. Cherry picking something to get to this cross asset model, which is how the formula is derived, is indeed just cherry picking. So let's look at his, everybody knows this revised model has been too aggressive, right? So he said in 2020 to 2024, we got 288,000 per Bitcoin. That never happened. Okay. So we know that. Then people say, well, go back to the old model. I don't think it actually projects out as far, but might be closer. I'll project it out for you. I'm not going to do that today, but regardless. Different models. This is only 2 models. He's revised a few different other things. Like I said, he's definitely shown silver at a stock to flow of 3 before, also at 20, also at 30. So that doesn't make sense based on this that I just showed you. All right. And in general, this is why I think that the relationship is just spurious. Is you don't even need a statistical program. You can just see we got bubbles up here, bubbles down here. But I will show you a formula so we can see exactly. Okay, so let's go back to his. Let's go to his first model. All right. Power laws and fractals. Of course, the model all right, that he used was a power law. It was a power curve, okay? The formula is here. It's right here. Okay, this is the intercept, which is an exponent of E, Euler's number here, and times the stock to flow. This is the power, 3.3. This is the number you need to pay attention to. This is the only number that matters for the stock to flow model. Yes, it matters which day we are in and which stock to flow we're actually looking at. But as far as the value increasing of the model, it's this. This is the key number. All right, 3.3. Let's look at his revised model. What was his revised model? Here's our power curve. 4.1. 4.1. So notice that the stronger model, which has already failed and definitely not price not keeping up with, that was using 4.1. The initial model, which again was using a weird silver number to derive it. I'm sorry if this sounds, like I'm beating a dead horse. Look at my tweets from 2019, 2020 on stock to flow. You can see I talked about these relationships, how you can pick any stock, any flow. Let's go back though. If you want to use, so people say, well, maybe this model's closer. I'm not going to look at the actual fit today, but 3.3. Okay, so it's a shallower. So basically, this power number means it's more shallow growth if it's lower, the number. That's it. Bitcoin, by the way, on price, the power is 6. The number is 6. And there's a quick formula to do it where you can find doubling time with power. It's different. Remember, it's totally different than exponential. Let's go back to my power curve chart. Why is power different than exponential? Because power has this either declining growth rate or increasing growth rate. It could go the other way too. But in this case, of course, this is the growth rate. The growth rate is declining over time. That's a power curve. Okay. It does not happen with the silver price. It does not happen with the gold price. It does not happen in financial markets. Financial markets are exponential curves. So that's the first thing. Go back. I mean, I've said that's the first thing like 5 times, so forgive me. Most markets follow exponential. Do not try to shoehorn or ham fist an idea into another. All right. Let's go back to his numbers. 3.3 and 4.1. Now keep those in mind. 3.3 and 4.1. I'm going to now take you back to this Excel little spreadsheet. Remember, I got all the various stock to flows that I showed you in this bubble chart, okay? Gold in native terms, gold in US dollar terms, silver in native terms, silver in US dollar terms, and then Bitcoin, mostly in native. I did do one in USD, but it just didn't make sense. Actually, while I'm at it, I need to show you one more thing from this table. Who's to say we even know, what are we supposed to do with this knowledge of stock to flow? Okay, so we know that Bitcoin comes out at a slower rate. That's great. That's why people like it. But let's look at these all-time averages now. Okay, so there's three things. We can look at average BTC that came out from January 3rd, 2009 until now. All right, and do a stock to flow on that. What is that? Well, the average stock is 9.9 million Bitcoin, if you're curious. It's just the average from the beginning until now. Average flow, 1.2 million per year. All right, that will work itself out to be an average. Stock to flow, 8. That's nowhere near what we are at today, so that's not really helpful. But you can do it. You can do that calculation. All right, now we have, what about now until 2140? Now until 2140. Well, the average, this is an interesting number, right? Remember, we have 19.8 million coins outstanding at the moment, 19.8 million. The average until 2140 will be 20.4. And only 10,000 will come out a year on average. Okay, what's the stock to flow of that? 1,978. So that's a great stock to flow. Here's the question. What number should I put in here? Should I put 100 billion? trillion, 100 trillion, 100,000 trillion, 100 quadrillion, that would be. I don't know, but we could try to shoehorn it in again, and I bet you it would fall away from that number because, again, this is just an average. We could also look at not now, but 2009 until 2140. 2009 until 2140. There we have 10.5 million is the actual average. You ever think about that? What's the average if you just look at a total supply curve, like literally every day, you take every day's worth of data and just pick the average Bitcoin during that period, 10.5 million. What's the average that came out per year? 159,000. Okay, that's not what's actually happening, but that's the average. Stock to flow there is 66. There's another number. Not very helpful, but we could use it. Anyway, I'm ignoring these two because they don't even have values and they're into the future. But I am using all the other ones for Bitcoin and for gold and silver. So we do that. We can create our own scatter plot in Google, which is better for, again, I don't use statistical programs too much. I manually calculate this stuff. But if you want to get just a simple R squared with these things, we can do it here. So this first chart takes all the observations that we talked about. It's the exact same thing as this, by the way. It's the same thing, but it's taking every single point of our stock to flow values. So whether I'm getting 16, 18, whatever, and I'm running a curve through it. Okay, so I can't do statistical regression so well in this program. So I'm going to this program, which is just simply Google Charts on a scatter plot. Very easy. What is my power curve? Okay, straight line. Looks like Plan B's cross asset model. Straight line. What's my equation? All right, first of all here, the R squared is not that great. Okay, notice that 0.19, it's not that great. This is just taking all stock to flow metrics because in my opinion, more is better, right? You can't just cherry pick one stock to flow measure, which by the way, you've changed 3, 4, 5, 6, 7 times for silver. Gold, you generally keep around 60, whatever, but you have different articles that you source from. You get the idea here, okay? More is better. So let's take all these stock to flows that I find with every possible way you can do it. Average from 1971, average from 2009, gold, silver, and Bitcoin, because Bitcoin is included here. He includes it, by the way, here. He does it in both models, but look at, he does these little clusters in early years. These are just early Bitcoin stock to flows. Okay, and then try to draw that straight line through. Well, what happens if you actually do it? You get this line. Power curve, what's the result? Here it is. What's the slope? That's the most important number to look at. It's 1, 1, 1, 1, 1. That's a pretty shallow number. That's not growing as fast as his. So in my opinion, using much better numbers, you'll get a stock to flow of 1. Remember, his was 3.3 in the old model, 3.3. In the second model, I think he's done even more, but I'm just looking at the first two. The second one was 4.1. We know we're way off that. First one, 3.3. Mine, using everything, is 1. 1 is the slope. But then you say, no, hold on. You can't do it this way because you're mixing the growth of native things versus the growth of the dollar. And I would concede that. I agree. It's maybe too many stock to flows. So let's go back. Let's show you what I'm talking about. Let's take away the dollar-based stock to flows. All right. So measuring things like Bitcoin in dollar terms, gold market caps, measuring silver market caps. Let's take away, but let's still leave a variety of stock to flows here, including Bitcoins, to draw a trend line. Okay. As I said, just using our eyes, it doesn't look great, but we need one trend line. That's what Plan B did. So we need one trend line with all these native stock to flows. Let's go back to Google. That is this chart, this orange chart here, only looking at native unit growth, market cap on the y-axis, stock to flow on the x-axis. We're in log. A power curve will be a straight line. Here it is. Here it is. 1.58 is the number. 1.58. Now, there's one very glaring problem here that should be obvious for everybody. Besides all the cherry picking, besides all the just selecting sort of random stock to flows that might pick our model, besides changing silver stock to flow from 3 to 20 to 30, there's one problem. And by the way, just to conclude, sorry, the 1.58 power is pretty close to 1. Okay, so this is the most important number. The power here is 1 for me. With every variable, every stock to flow possible that you could possibly think of. 1.58 when you only look at native units. So it did get faster. This helped us a little bit, but it's not nearly as close as his 3.3 or his 4.1 in his revised model. And again, there's probably more models. But, you know, he had silver as a 3 stock to flow. He had it at 20. He had it at 30. He had different things. What's the glaring issue that we can think about with stock to flow as time goes on here? Okay. I mentioned it before, but as time goes on, generally, exponential growth rates are the same. But as time goes on, Bitcoin growth rates, that is the, stock to flow rates will increase. Okay. And how can I show that? Very easily. Remember the curves here. Gold. Over the long term, stock to flow is 59, which again is a terrible number. I would recommend using doubling time, which is 41. Doubling time will give you a much better number as far as if you want to understand what's happening with the growth of gold. It doubles every 41 years. 59 is just a meaningless number, but it is our econometric stock to flow nonetheless. Silver. Over the long run, stock to flow is 74, meaningless number. The doubling time of silver stock is 51 years. It actually doubles slower than gold, like I've talked about. It's just how it works. Bitcoin doesn't work like that at all, as we know. The stock to flow of Bitcoin will increase over time. So what's the word here? I'm ham-fisting, sort of horseshoeing in a shoehorn. God, I can't even speak anymore. I'm shoehorning in a compound number to give you the stock to flow of 4. All right, at this point. But as we know, we go out in the future, stock to flow will increase, i.e. the emission rate will decrease. That's just how Bitcoin works. So going back to the scatter plot, if the stock to flow of silver and gold, which is in many of these data points right here, is generally the same, but the value increases, goes up. And whereas Bitcoin, maybe let's go back actually to this chart. It could be easier. These stock and flow numbers generally stay the same. Generally. We can get different numbers from different periods, averages and everything. But since this is exponential growth, since these markets move in exponential, these stock to flow figures generally stay the same and the values increase over time. That's just what's happened. That's what we can observe. It has not been the case yet where Bitcoin is like enveloped gold or enveloped silver. It's past. Look, Bitcoin is past silver, but silver still goes up in value in dollar terms. So, again, the direction here is up. It's up, just straight up for stock to flows of gold and silver. But Bitcoin, as we can see, Let's even take off gold. The direction is to the right. And indeed, as we know, what is a straight line on log scale? It's a power curve. So plan B, though he doesn't talk about a power curve a lot, his model is a power curve. All right. And that's generally how the stock to flow metric looks. You know, you can definitely get a straight line here from this chart, but the actual growth rate is not even that. The actual growth rate is logarithmic. All right. Bitcoin's price follows power. Bitcoin's supply follows logarithmic. Everything else follows exponential. At the end of the day, the highest market signal is price. If you want to know how things grow, look at the price. Draw a trend line to the price, measure the slope of the curve, and see. Peter Schiff tells you gold is going to $1 billion. It's impossible. It's impossible. There's no way. The market didn't even demand that before Bitcoin. It's certainly not going to demand that after Bitcoin. Gold price is going to be somewhere around $6,000 by 2050. $6,500. We can draw, we can assume that it stays above trend and maybe pulls this trend line up. Maybe it goes to $10,000, $20,000, whatever. But it's not following the curve of Bitcoin. Silver, the trend line is very simple. By 2050, $50. $50 for silver. Bitcoin, only by 2030, we're looking at 560,000. And as we know, if you go farther, you can get to the millions relatively soon thereafter. I will go address this page on my site, which is still only one chart here, but we got the power trend for you if you want to look at that. Look at the doubling time, which again, it's not a doubling time doesn't work in power. You get a proportional doubling. So that's this last column. Every 12.7% increase in the life of Bitcoin, the trend doubles. Okay, so you get to that 2030 number, close to it. We're at 520,000. That's the trend. Double by 2033. Double again by 2036. That's the trend that Bitcoin is on. It's on a power trend. So it's completely different. It's completely unanalogous to exponential growth. So it is correct to put the stock to flow model for Bitcoin on a straight line in log scale. It is not correct. And all I'll say there is just directionally. I'm not going to say anything more than that. It's directionally. But there's no way you can say that gold or silver fits into this and improves your R squared, because gold and silver follow exponential curves, finding the other cross asset here. And every, 5 years or something that gold or silver will exist, they're just going to go up here. But their stock and flows are going to be the same, because stock to flow is a constant in the world of exponential, which is the world of gold and silver. All right. So Bitcoin clearly follows power. We can see it in stock to flow. It follows power. All right. We can see that it follows power in price. All right. But as actual emission of Bitcoins, it follows logarithmic. It's actually different still. So keep it simple. At the end of the day, look at price. That's the highest signal. Gold is exponential. Silver is exponential. Bitcoin is power. Not finished yet still with stock to flow. I want to give you a time series in the next one, which will model out both Plan B's model and then, of course, our other options for how price can be modeled out using the power curve. So that is it, guys. Thank you for sticking through that with me. I hope that was clear. End of the day, the highest market signal is price. Market cap, supplies, those are interesting. I work very hard to track those in a good way, but they're secondary factors from price. At the end of the day, we follow a trend. We follow price, whether we're entrepreneurs, investors, just want to help our family. And that's what it's all about. So I'm going to keep following the trends. Following stock to flows will give you a misguided approach, a ham-fisted approach, trying to shoehorn exponential growth from gold and silver onto power growth, which is Bitcoin, and that doesn't make any sense. So with that, I leave you. Thank you very much. Really appreciate it. Hope it helped. Share it, like it, and I'll speak to you guys next week. Have a great weekend.